Is an Uptober breakout developing right before our eyes for Bitcoin, or is this another short squeeze fake out? Hey guys, it's Keith Allen, and hope you had a good weekend. Hope it's been profitable for you. And now, I'll be honest with you, I'm seeing some mixed signals. Obviously, price appreciating here this morning, but I'm seeing some mixed signals that are making me question whether this is indeed a legit, sustainable breakout developing in front of us, or if this is just another short squeeze that's going to result in a fake out. Let's do our best to try and analyze this and see if we can figure it out. But first, as usual, a bit of housekeeping. If you like the streams, do me a favor and smash all the buttons. Live chat is open here on YouTube, so I invite you to join in and share a comment or some insight. But also, of course, we're going to look at some signals. We're going to look at the order book and fire charts and order flow, and look at some indicators that have me questioning whether or not this is indeed a real move. And so for that, let's start on the candle chart, because that's where I'm really seeing some things that presented some questions for me. So let's go ahead and share the screen. And we can take a look here at the weekly chart. We did get a red weekly close, although remember, we're coming off of just the week prior to that had some serious action in it, where we cleared all of the moving averages and the 2021 mid-cycle top, which you see up here, and then reverted, and we had a nice wick down there to the sub 60K level. Everybody freaked out, and this is something that I really want people to think about here. Do yourself a favor and don't subscribe to the crypto bro narratives, because they're just not reliable. If you remember back in September, September was supposed to be the September slump. Well, September brought us a lot of volatility and ultimately ended up with a green candle. I think we had 30-40% of range. What was it? About 30% of range. Last month of September, it ended up over 7% to the upside on the close. And now here we are on the October candle, largely considered by the community as Uptober. And yes, there have been a lot of the majority of Octobers have been up months, but not all of them by any means. And, last week there was a completely different tune. Last week, when price was wicking down to sub 60K levels, people were questioning Uptober. And I would encourage you to question Uptober, because we just have not yet received any validation that this is going to continue. Now, I'd like it to, for sure. And as you can see, we're now above 64K. Yesterday, I posted that I had seen some liquidity movement in fire charts that paved the way for an easy move to 63, which we got, right? Things had thinned out. The door opened up, and we had a nice rally up to 63, and then and beyond, right? So now, is this 64 level going to hold? Now I want to show you where things get a little bit questionable for me, and this isn't a decisive move in my opinion, and here's why. I'm seeing some mixed signals. We're going to start here with the 21-week moving average, and look down here at trend precognition. Of course, the trend precognition is a tentative signal here until this weekly close. But at the moment, we're showing momentum loss and a potential downtrend on this week, which doesn't necessarily mean that we're going to go lower than we did last week, but it indicates that we might not go higher than we did last week. And last week's high was at 65.6 and change. And so I'm wondering if we're going to have a sustainable move back above this mid-cycle top and then start actually making higher highs, or if this is just a fake out. And I'll tell you why. So if you followed the stream for any amount of time, you know that I like to use the 21 week moving average, and a lot of people do. And a lot of people use the 20-week moving average. Lots of people use different moving averages, but the 21 for me, since gosh, I don't know, late 2017, early 2018, I have been using the 21-week moving average in crypto, and the reason I like it is because well, there's a couple reasons I like it. Namely, the fact that, well, number one, we have a 24/7, 365 asset in crypto, or asset class in crypto, versus TradFi, where we use the 20-week moving average pretty normally. And also because crypto is more volatile than TradFi, I think the 21-week moving average smooths things out a bit more than the 20-week. And that's why I use it. It's worked well for me. You may have a different opinion, and I welcome you to share that. There's also debate over whether you use the SMA or the EMA. I personally like the SMA. It has served me well over time. Again, you do what works for you. I'm just sharing what works for me. Now, if we look at the closes, yesterday's close, and I'm going to zoom way in so you can see it. This green line is the 21-week moving average. Let me put on the data so you can see the metrics here. Yesterday, at the weekly close, the 21-week SMA was at 62,882. That's going to vary a bit depending on what exchange you're on, but for all intents and purposes, we're going to say 62,882 for where I'm at. And the close, as you can see, was at 62,814, just shy, very, very close, just a whisker below that 21-week moving average. Now, a close above that level would have given me some confidence that, hey, this wick down was just a quick flush, and there's some strength. We've closed above. Well, right after that close, price moved above the 21-week moving average, and as you can see, where that sits now, the 21 this week sits at 62,772. So what? Slightly lower, about $110 lower, and price so far, well, it did live below that briefly yesterday, right? Because we got that close below. So it was briefly below that 21-week moving average. In other words, we do not have this week, we didn't have a candle that lived fully above the 21-week moving average. You see this tiny little wick here on this doji candle. It's a fat doji. This one, a doji hammer, actually is what this looks like, and that's a bullish signal. Actually, this is actually the first time I'm actually noticing this. This one does also wick down below, and this one wicks down below. So we don't yet have any full candle bodies above that 21-week moving average. Now, if I were to change this to the 20-week moving average, we're going to get a little bit different perspective here. Let's go doom and doink just for shits and giggles. And you can see that again, we wicked below it at the end of September. We came all the way through it, of course, last week. And this week we sit just a hair above it. It closed. So actually the close yesterday, the weekly close was at 62,814, and that is $101 above where the 20-week moving average is. And so today we can see that the low is at 62,646. The 20-week SMA is at 62,483. So at the moment, it is living its life above this 20-week moving average, and that is a positive sign. That's bullish. This is bearish. This candle could be bullish, could be a doji hammer that's reversing here. We'll see. Time will tell, right? And time will tell whether this signal here invalidates as well. So what do we need to see happen for this to give me some confidence that things are indeed going to continue to trend this way? So the first thing that needs to happen is this needs to live its life above this 20-week moving average. All right. I like the 21, and the 21, the fact that we have wicked below it has me a bit skeptical. The fact that we have all of this other shit flowing around, geopolitical tension, domestic political tension, etc. Now everybody's questioning. Well, not now, but everybody continues to question the economic data that's coming out. Um, we got a good report last week, and suddenly the market says, "Oh, well, not suddenly again, but now." The market is screaming on whether or not it's accurate data. Hey, it might not be. We do have a political event happening here in 30 days. So you never know what's happening. There could very well be some smoke and mirrors happening, but the market is only good as the data that we get. So take that for what it's worth. In the meantime, my assessment has been that Bitcoin has remained strong, fundamentally strong. We can see that we have had there was some selling on ETFs on October 1st. I usually attribute that to a quarterly rebalancing event. It was followed by a bit more selling, including some selling from BlackRock, which is very rare, I might add. But we did end the week on a positive note with positive inflows for Bitcoin, and also positive inflows for the underperforming ETH ETF. So those are things to keep in mind here. Um, Also, of course, we're still in our post-halving environment. The outlook for Bitcoin has never been better, in my opinion. You can hem and haw over the political candidates saying what they're saying about Bitcoin. I think that Bitcoin does whatever it's going to do, regardless of who wins this election in November. I think that we could see a potential short-term volatility out of the election, and then Bitcoin will get right back to its previously planned schedule. As you can see, we've now fallen below the 64K level rather quickly, and we have a pretty solid, a pretty open void here below, which means it's very easy to slide back down. Up, you just saw some of this bid liquidity just shift down a bit. So we'll see how that holds in place. You can also see this purple class of whales has been buying through all of this consolidation range, and that's also notable. So these things are positive for the long-term outlook for Bitcoin. What happens here in the short term remains to be seen. And so I have been saying for a couple of weeks now that it's really getting difficult to trade this. And if you have conviction that Bitcoin is going to go up, then stick to your conviction and stick to your plan until you see an invalidation or other news that makes you reconsider what you think is happening. For me, my long-term outlook is still bullish. We may have volatility. We may go all the way down, potentially back down to previous levels, potentially even 50K, if this thing still holds in place. Now, in terms of invalidations, again, in terms of the short term, I'm looking for this moving average to hold. Again, I'm skeptical because the 21 week didn't hold, and now the 20 week is holding. So losing the 20 week would reaffirm my thought that things could break down a little bit, but that doesn't mean that things would break down past potentially the 50-week moving average or this double bottom that we had here, just sub 54K, and most certainly, things resting on this trend line here. As far as I'm concerned, this is the invalidation here for me. And if we lose that, there's a last line of defense here in the 200-week moving average, obviously a very, very important one. That is at a prior consolidation range that I've been waiting to get tested. So I'm not going to lie, I do have some bids there just in case we get that event. But it's getting less and less likely to me at this point. So those are the things that I'm looking at this stage. Thanks, Michael. I appreciate that. Hope you're doing well in your part of the world, my man. The Cheetos Fingers kid. I love that dude. Actually, no, when I say I love that dude, I mean I love this dude, Michael. The Cheetos Fingers kid, I'm not a fan. So anyways, I think that you guys have some bearing, at least have some insight to what I'm looking at, and I hope that helps you make some decisions as we move forward. Don't be hasty, right? Give things a chance to play out, because if we do move above this 2021 mid-cycle top, then we've got a chance to start making higher highs, and obviously we need to see those series of higher highs happening. In my opinion, the healthy move would be getting above this mid-cycle top, consolidating here to go after the 2021 top at 69. So this is basically above 65K. This is above 69K. And then we have really significant higher highs to go after here, that could get us on a trajectory to go after that all-time high. I've yet to see it, but I'm patiently waiting for it to develop. I would not be surprised if this doesn't happen until after the election, potentially even after the first of the year. But with that in mind, the trend is still intact. I'm still long-term bullish, and that's what I am watching here on Bitcoin. So give you one last look at the order book. It looks like this might break down a little bit, but we're not seeing a lot of unified sell pressure here at this point. So let's see. You can see secondary support down here above 62K, and then more support stacking above 60K to keep this move intact. We'll wrap it right there, guys. Again, if you like the stream, do me a favor, smash all the buttons, and please share this stream so that we can grow the channel. Also, make sure that you hit that subscribe button so you don't miss any of the future streams. Have a great day, guys. Have a great week. And as always, trade safe, my friends.